Hey guys, welcome to another episode of Danny's Life and Travel. And today I'm just giving you another update on AMD. So what's happening with AMD today? Well, basically in the past week we had, as you can see here, from Monday, it's pretty good. It was up. We're doing alright. We were at $14.50 and it was fine. This is what I expected it to be, for this period because the following week, so the week starting the 10th of April, we would start having, so on the 11th of April we would have the launch of Ryzen 5 and so on, so all the good news would start coming out. But in this past week, I expected it for Monday, Tuesday, Wednesday to be bland or be flat, not be going down or anything like that. And then Thursday should have been higher because Microsoft Scorpio was launching. But what ended up happening is we had Monday, Tuesday and Wednesday, which was pretty good. We had some upgrades as well. I think it's Concordia, they upgraded AMD to a buy as well. And there was a couple of upgrades. But then on Thursday we had Goldman Sachs, which downgraded the stock to a sell. They didn't actually downgrade it. What they did is they started covering it. They'd never covered it before. So they started covering it and they covered it, with the start, with the beginning rating of a sell. They wanted to rate a sell. And the price target was $11. Now, a lot of people panicked, as you can see, and the stock went down by 9% in a day. That was at the beginning of the day. And then it climbed back up and finished the day down by 6.38, I think 28 or 38% by the end of the day. But today, for Friday, it continued to go up. So the beginning of the day it went up by 3%, right, and then came back down, and then it was just flat all day, and then towards the end it went back up by around 1.88%. So total, if you take it off, so we got 6.38%, take away 1.88%, that leaves you with about 4.3% or something like that, rough estimate. So that's what we're down by, right? So we're about here, right, where my little hand thing is. So it's still not so bad. Now Goldman Sachs, just a couple of notes on Goldman Sachs. I have been trading for a while, and last year I'm just going to point out all the times I saw Goldman Sachs manipulate stock market. Okay, so I'll just do one that's recent. So let's see, not that one. So you got here, Tesla gets downgraded to sell by Goldman Sachs. Goldman Sachs thinks it's time to pull the plug on Tesla stock. David Timberino, an analyst at the influential Wall Street investment bank. So again, if you look at Tesla, I know we're not doing apples for apples, but the idea is kind of similar. So if you look at AMD, we have products in the product line. If you look at the past wasn't great. They had problems. The products weren't as good as they wanted them to be. They weren't even close to as good as they wanted them to be, and they had a lot of issues. So they overpromised, underdelivered a lot of the time. So the past is not good. Okay. And it's the same with Tesla in some ways, because their past is they've never really turned a profit. I think only one quarter last year they turned a profit, but really they haven't turned a profit, and it's all been burning money, right? AMD is also been in the same situation. They haven't turned a profit, in the recent history, in the last number of years. So looking forward, right, the reason why Tesla is so highly priced is because if you look forward, people know that this company will succeed. I believe it'll succeed. It'll just take time, right? And they did promise, that they would be building 500,000 cars, right, by 2018. That's the target. That's what they wanted to do. Now I think they built 25,000 cars this last quarter. So if you extrapolate that forward, they'll be building 100,000 cars this year, right? So it's going to be, if they're really good, they might get to 150, and then by next year, end of next year, get to 300. But they're well short of the 500,000 target, right? So it is a good reason to downgrade them, to say, look, it's not worth, the stock isn't worth it. But still, it is a cult stock, so it went up to some extent on that basis as well. But what I'm trying to say is that they downgraded Tesla, right? And they downgraded Tesla on the 27th. I'm just going to try and pull up the chart, try and show you that. So let's go to Tesla chart here. So let's go monthly, 3 monthly, 6 monthly. That's easier. Okay, so here we are. How was it? It was February 27. Right there. So that's the point where they downgraded it, right? And they put a price target of 185, right? And look where it's gone to. It's gone to 300. Yeah. So again, they're looking at the stock, and they're saying, I think it's a sell. But then they project, when you project it forward and you think about everything that they're doing and the possibilities, yes, long term they'll make a lot of money and they will succeed. I believe that. I believe that if they stopped growing right now, they'd be in profit, right? All they have to do is stop building, the factory more, and building out the infrastructure to build more cars. And if they just said, right, we're stopping all that activity, we're just gonna use the infrastructure we have to build cars and sell them, they'd be in profit. But they're forward thinking, they're investing and forward thinking. AMD in many ways is doing the same thing. They're forward thinking, they're still developing new products as we speak. So my point is that they downgraded them and now it's up. I also read a recent news article, so think about this. They downgraded them here, right, to sell and put a low price target. And then around this point, about a couple of days ago, I was reading an article by was Adam Jonas from Goldman Sachs, and he was saying, I think Tesla is tapping into, I think, a $12 trillion market, right? He's trying to quantify it. So he's trying to say, they're going to make a lot of money, right? So it's a pure contradiction, isn't it? Here it's, we think they're going to die, and then here it's, we think they're going to succeed, right? Pure contradiction between the two. Okay, so that's one. I want to just show you some more. Where are we? So let's do NVIDIA. NVIDIA, this is last year. So let's go for NVIDIA. Where are we? So okay, so this spike you see here, this was NVIDIA. End of December, NVIDIA got upgraded by Goldman Sachs, right? They said, okay, it's a buy, it's amazing. And I was kicking myself, thinking, shit, I wasn't in that stock. It went up by 9%, 8% in a day, right? And then look at what happened, all the way down, right? January, right? And the reason was, by the end of this day, everyone found out that they had some stocks that they wanted to sell, some NVIDIA stock that they wanted to sell, and this is why they upgraded. And so when NVIDIA, I think there's some kind of deal that was made, and NVIDIA paid Goldman Sachs in shares, right? Maybe there was a stock split or whatever it was. I can't remember what the details were. But basically, the news was that Goldman Sachs had some NVIDIA shares that they had to offload, right? And it was coming to maturity, there were rules that you can only sell them by this date and not beyond. And so because of that, they pumped up the stock and they, sold out. Now I know I'm not providing you links or evidence for this, but it is true. I mean, if you want to really research, you'll find out. I'll just do another one with Tesla. If I can show you this one. Basically, I was in this stock when this happened. So this one, I'm pretty sure of I don't know the exact dates. So it was somewhere around. Let me see if I can go into this 1 year. Let's do that. So okay. So basically last year I bought Tesla around January 20, or somewhere around there, I think. 22, 20. Yeah, I think it's somewhere around here. Yeah, about around here somewhere. and they went down and they went back up. So I was making money here, and they started to come down again. I was believing in Tesla. I thought, okay, and it came down. And then around here somewhere, I think this was Barron's. I can't remember if this was Barron's saying that Tesla's going to be big or whatever. But either it was on this side or here somewhere. So basically, the idea is you can even research this for last year. What happened was Goldman Sachs on a Wednesday. I just remember it was a Wednesday in the morning. Goldman Sachs said to everyone, "Tesla is a buy." Yeah, it's a buy, and everybody bought. I don't know how they have so much influence, but they have influence, right? So basically, remember at this point when Tesla came down, they had an earnings, right? And in the earnings, I just want to give some context to this. In the earnings, Tesla said, Elon Musk said, we're going to have to do a capital raise. That means we have to do a share offering. So basically, what they're trying to say is we have to sell more shares to get the money so we can keep this going, to keep the company going, because we're expanding so much. Now, the problem with issuing shares is when you issue more shares, it dilutes the existing supply of shares. So that means the value of these shares currently, whatever price they're at, say they're at 207 or 208, it's going to go down even further because you're adding more shares to the pool. So I think, they probably talked to Goldman Sachs and said, look, we'll make you the underwriter, because that's what it turned out to be. So on the Wednesday, they said to everyone, in the morning, Tesla's a buy, and then around, by the end of the day, by market close, they told everyone, well, Tesla's doing share dilution, and the good news is we are the underwriters. It was Tesla, it was Goldman Sachs, and I think it was JP Morgan. Those two were the underwriters, and Goldman Sachs was going to make $400 million out of it, right? Just for underwriting. That's what they were going to make. So you think about that, it's a conflict of interest, it's clear, and that's what they're doing, right? The other thing I can show you, so we have that. I've shown you 3 examples. But keep in mind with the AMD as well, I think right after, so that was the day. Let me see if I can find the articles. So basically, I'll just give you the gist of it. I don't know where the articles are really, but even though Goldman Sachs downgraded AMD, there were other people that came out, other analysts and other news articles came out saying that AMD's a buy on the dip, and they don't agree with Goldman Sachs. Okay, so that did happen as well. I'm just going to show you one more thing. Just to illustrate this, and then we'll go on to the future predictions. I think I've taken enough time. Anyway, this is a diagram of how what the structure is of an investment bank, and this comes from an ex-Goldman Sachs employee. Yeah, and he does courses as well. So anyway, this comes from him. So he explains it like this. So he says that the traders at the bottom, the 100 traders, are the ones who make the money. So these are the profit centers, yeah, and the rest are all cost centers, yeah. So he says support profit center, support profit center, support profit center, yeah, genuine cost center, yeah. But really, this is a cost center as well. Yeah, this is a cost center as well. It's it's reduced down. But the way he explained it was this. He said 10 years ago, when the last financial crisis happened, at that point, big hedge funds used to pay for analysis. They used to pay for research and analysis. So then at that point, this was a profit center, because they'd pay for it, so they were making money. But these days, it's not so much. They don't do it because they all have it in-house. They have their own analysis. They have their own people. So at an investment bank, when these people, basically they're in decline already, there's not many of them out there, and the ones that there are, they don't make huge amounts of cash, right? The hedge fund guys, these guys do contribute something, right? and this side is in decline as well. The long only sales, and then you got the sales traders. These are the guys that pick up the phone every time you call and you want to place a trade. So they don't really add any value. They're just like receptionists, right? Just take the order, put it in the computer, done, right? The real people who make the money are the traders. And what they do is, he explained it like this, that about 72% of their time is spent making markets. And, basically, actually, sorry, that was wrong. About 80% of the time is spent making markets. About 20% of the time is spent basically, so they make markets, and then 20% of the time is where they have to take risk. So 80% of the time they are using, they're using other people's money. So when you place an order, they're doing that. And then 20% of the time they're using the bank's money to make money. So they're taking risk. Okay, that's the first part. The second part was the 72%. The 72% of the time they are basically taking orders and making markets. So what they're trying to do is find a new idea, say a new strategy of how they're going to make money. So for our example, this is only an example. Let's say they said to the analyst, "Hey analyst, why don't you put out a report to say, hey, everyone should sell AMD, let's downgrade it." And then the trader would go in and he'd buy. Do you get it? So because the stock would go down by 9%, they'd buy it. They'd buy a big chunk. And then when the stock goes back up, they're hoping they'll make some money, which he has done already, So it's up by, from the lows, if you bought it at 9% down, it's only 4.3%, down now. So he's already made about 4.5%. Pretty good for a couple of days' work, right? But let's say he's done that, right? The other percentage, so what's left over, is about 28%. Or something like that. I think it was more 18% of it. The rest of the time is spent putting out fires. So how they do this is, let's say a hedge fund or a client comes in and says, "Hey, I want you to basically take an order. I want you to sell me shares, of AMD, but I want you to take the risk." So then the bank has to sell them the shares first, and then they have to go back into the market and then buy the shares. So that means the bank is short the shares. All right, and this isn't coming from me. This is coming from a Goldman Sachs employee, an ex-employee. And I researched this a little bit. So that's what he said. So what they have is they have all these short positions on their books, and what they're trying to do is, the rest of the time, 72% of the time is market making. The rest of the time he's trying to put out those fires. He's trying to make sure that they don't lose money on those short positions, right? So again, if they were short, right, on AMD stock by so much, right, and an analyst said, one of the analysts downgraded it, what do you think would happen to the short positions, right? So the stock would come down, and these guys could, number one, offload the short positions. They could buy the shares, right, to offload those short positions. But at the same time, they get a secondary chance to buy shares more to long it as well. So they kill two birds with one stone. That's what I'm trying to say. But this is how it works anyway, just an illustration. Sorry about this video has taken so long. But, it's all cost-based, most of it. The hedge funds do make some money, I know that. The long only sales, that's in decline hugely, and these guys are just like receptionists, and they just facilitate. So they will pass an idea to them, and they'll pass it to the clients, and then they'll agree to go through with it or whatever. But anyway, this is how it works. Upside down pyramid, crazy, but that's how it works. For the future, where are we looking? This is my calendar. As you can see, we've got Ryzen 5 launch on the 11th, as I've mentioned before in past videos. And then we've got, on the 18th, we've got the RX 500 launch. I'll just go over to the next page if I can. I think I've gone too far, maybe? No, I haven't. Okay. So you got the RX 580, which is graphics card. That's on the 18th. So that's just a refresh of the RX 480 GPU. And then the following week we have the annual shareholders meeting, right? And then the week after that we have AMD earnings. So if you think about it, it's 4 weeks of positive news now. We're at the beginning. And what did I do last week? I did the better nicer, which means now officially from that day onwards, all of my money anyway is all tax free. So I'm not going to be paying taxes on any of this profit that I'm going to be making. And I think within the next 4 weeks, if I don't make profit, it's time to get out. Because I mean, if it doesn't go any higher based on all this good news for 4 weeks, you have bang, bang, bang every week, good news, good news, good news, good news, then it's never going to go up. Especially after the shareholders meeting and earnings, especially after earnings. If after earnings it hasn't affected it, get out. So anyway, that's my plan, and that's where I predict it to go in the future. Sorry this video has taken a little longer. I've just been trying to explain the situation with Goldman. So I've learned whenever Goldman says sell, you should buy. Whenever Goldman says buy, you get out of there, you sell. So it's the opposite effect. And that trader was saying as well that Goldman is head and shoulders above the rest. And I think the reasoning behind that is that they get away with murder. I mean, they've been fined so many times. If you did the research, they've been fined so many times. They have so many times they've had regulators look into them for market manipulation, for fraud, for all kinds of stuff. And they've gotten fined many times. But still, they're existing. They managed to plod along. They managed to make huge amounts of cash by doing this stuff. And nobody ever puts them out of business. So anyway, guys, that's my update for you. I hope you found it informative. And if you did, please like, comment, and subscribe. And even if you didn't, you want to have a go at me, have a go in the comment section below. Okay, guys, see you later. Thank you. Bye-bye.